Hi there, welcome to Commodities. Let's check in on the oil price before we get going. America's special envoy is due to hit the road next week to try to hammer out a deal between Russia and Ukraine. And of course, that could ultimately release lots of Russian oil onto the world market. Certainly, the flow would be eased, but right now, investors bidding up oil. Trading was lightened, though, of course, by the Thanksgiving holiday south of the border. Let's have a quick look at where the metals are trading right now. Bloomberg reporting that there was substantial ETF buying yesterday. That can be a symptom of U.S. in particular retail investors taking another look at gold. Gold has been rallying over the past few sessions, but you can see slipping today. It has been buoyed, though, by an expectation that the Fed will cut interest rates again next month. Quick look at where the agricultural commodities are trading right now. We'll come back to that one. The big story in the commodity sphere right now, politically anyway, the Prime Minister, Mr. Carney, and the Alberta Premier, Danielle Smith, have signed a new outline energy agreement, a memorandum of understanding. It's a plan aimed at cutting Canada's dependence on exporting oil to the United States while unlocking potential in Alberta's energy resources. And this memorandum indicates Ottawa's support for one or more new oil pipelines to increase export access to Asian markets. Ottawa has agreed to suspend some environmental policies for Alberta, and it will adjust a tanker ban on BC's north coast if necessary. The Globe and Mail says Anglo American's proposed takeover of Teck Resources has cleared one hurdle in Canada. Ottawa has apparently cleared the deal on national security grounds because the security review period elapsed without an extension. However, there are more rivers to cross, including a net economic benefit review. Anglo and Teck shareholders are scheduled to vote on the deal on December 9th. Let's take a look at shares in Algoma Steel, rallying about 4%. The federal government announcing that new 25% tariff on about $10 billion worth of steel derivative imports from all countries, including the United States. RBC says the Canadian market, though, is still expected to end up in a position of oversupply. However, Ottawa's plan to reduce freight rates for inter-provincial steel transport should increase demand for Canadian steel and make Ontario steel more competitive. We've been watching some of those big Canadian steel stocks closely today after the federal government announced those measures aimed at protecting the steel and softwood lumber industries. We were joined by Keenan Loomis, CEO of the Canadian Institute of Steel Construction.
The Prime Minister announced that his government was going to liaise with the steel industry and talk about, obviously what the impacts of the tariffs have been and what we would like to see as a result enacted into policy to help us get through this very time. So all of the things, the buckets of announcements yesterday are all topics that we have been discussing with the federal government over the last number of months, sometimes on a biweekly basis. So they've been listening and they have responded in kind and basically given the steel producers. I don't represent the steel producers. I'm in the structural steel industry, so I represent everybody that engineers our steel to make our infrastructure. But I'm very privy to these conversations, and the steel producers did an analysis for the government that showed that at these levels, they can recapture a good portion of the domestic market. This is what they need to be able to weather these difficult times. And we're particularly focused on the domestic procurement aspect. There are more details to be announced, but we believe that we should be our own best customer, that there's a lot of domestic market share out there, not just for raw steel, but for fabricated steel as well, especially with taxpayer-funded projects. So we're very happy with this announcement. It does provide us with a little bit of certainty going forward.
And what are you following with the procurement? What's your concerns?
Well, the big thing for us is to make sure that all of the rules apply not just to primary steel, but to the derivatives industry as well. So again, we buy steel, we fabricate it, engineer it for our infrastructure. Thus far, everything that has been announced to protect the industry up until yesterday had only applied to primary steel. So the fact that all of these measures are now applying to derivatives, which are different, codes, different products when it comes to international trade. And, so we're very ecstatic with that, because if you do not protect all of the various elements in the value chain, you're really not protecting the producers either, because it creates loopholes in the trading system. So that's been shored up. And just that directive, that mindset change in terms of procurement for us. Again, up until now, we've been really frustrated with the fact that this government and even the provincial governments, we seem to be the only Boy Scouts left anymore talking about our WTO obligations. Now, that old trading system is gone, and we really need to be mindful of, especially where our taxpayer-funded dollars are going. And so to have that directive, and have that directive then flow down into the provinces, because of course the federal government is one customer, but the provinces are the ones that build the hospitals, the schools, the bridges, so they buy more steel, and the municipalities even more as a result. And we know the municipalities, we know the provinces are looking for direction from the federal government, and we're headed in a good direction.
And just going back, what are some of the products that will be affected by this that would have been coming in from the U.S., and how are they going to be replaced from the Canadian side?
Yeah, the biggest impact is going to be on cheap Chinese dumped steel, unfairly traded steel that's been flooding our market, especially since the Americans have closed their borders to that market. And so what has happened is the floor price of steel in this country has now gone up. It doesn't necessarily impact, the domestic stuff, although, again, now the market has opened up a little bit more. But it's that stuff that is unfairly traded. We just want to go head to head on a fair basis. And so to keep out, the Timu steel, the not only dumped, but just, really low quality steel as well. So it's going to impact the private sector probably more than the public sector. The public sector, again, we're going in that direction of making sure that taxpayer funded dollars are going to support domestic. It's going to be the private sector, so the owners, the general contractors, they are going to have to pay a little bit more in steel, but we think that is well worth it to protect the domestic steel industry. And again, all parts of the value chain.
And for those companies, how much more will they be looking at when they turn to the Canadian steel producers?
Well, that's not certain. Obviously, now everybody's going to be going out to the market to see what's happening. Obviously, we have a month as well to adjust to this. So some projects that are currently in the pipeline, you have a little bit of opportunity to plan for that. But again, this is all about keeping out unfairly traded steel. We shouldn't be comparing, the price of domestic steel to the lowest possible amount that you could get here in this market, because that always involves cheaper steel, and more it's involving pre-engineered steel, and that's where the tariffs on derivatives is really helpful to us as fabricators and builders of our infrastructure.
And just one last question: any concern, any worries of political repercussions from south of the border with this?
No, I don't think so. And I think, in fact, we're preparing ourselves for CUSMA renegotiations. One of the things that we haven't talked about yet that I think is going to be really important is increased enforcement and what's coming into our country. Because the Americans have, the 232 tariffs are ostensibly to stem the flow of Chinese steel coming into America. Why we've been caught up in that, that's something that we've had to deal with as a country over the last year, psychologically. But it is about the unfairly traded steel. So if we're acting as tough as they are vis-a-vis Chinese steel, and stepping up our enforcement so that they know that we're not going to be a transshipment point for Chinese steel to come in through the land borders, I think, in fact, we're positioning ourselves really well for renegotiations with the U.S.
Okay, we've got the federal government pretty active this week, announcing those measures to try to support lumber and steel, and also pressing ahead with a memorandum of understanding with Alberta on developing energy resources. We're going to be joined by Lindsay Biscaya, though, after the break. She's going to drill into just some of these issues. The Prime Minister and the Alberta Premier signing that major new energy cooperation agreement. Of course, a lot of the details have to be worked out, but they're outlining conditions that need to be met for a new bitumen pipeline that would deliver Canadian oil to the Pacific. Let's get more from BNN Bloomberg's Lindsay Biscaya. Lindsay.
Yeah, so this MOU today basically lays out the groundwork for a potential pipeline in the future, or even more than one. But as you mentioned, there's so many conditions here that need to be met before this would ever go ahead. So among those conditions, there's some big ones for the province of Alberta. Alberta has to sign on to an industrial carbon pricing agreement to lower emissions by 75% over the next 10 years. They also have to extend the carbon capture incentive program. This is one of the largest carbon capture projects ever. So according to the MOU, the Pathways Carbon Capture and Storage Project is directly linked to the pipeline. One cannot happen without the other. That's what it says in the MOU. So there's very much things have to be met here for this to go ahead. Yep. And then in response to that, the federal government will not be implementing a cap on emissions from the oil and gas sector in the province of Alberta. So as I mentioned, this lays out the groundwork for a pipeline, clearing the way for the possibility of others too, though, because the MOU focuses on constructing, quote, one or more pipelines financed by the private sector with Indigenous cooperation. So that's the other part of this, too. The Prime Minister says if there's not a private sector proponent of this, then there will be no pipeline. And then, of course, that tanker ban exemption that everyone keeps kind of focusing on here. That's a possibility as well. That would be the last step in all of this, though. So the MOU also makes that very clear. Everything else has to happen first. And then when all of these conditions are met and everyone has followed through on their part, then there will be potentially some consideration of a tanker ban lift.
Yeah, so that's big. I mean, lowering methane emissions by 75% over the next decade. Yes. That's seen as a pretty noxious greenhouse gas.
Yeah.
And also, Alberta, the federal government to help Alberta possibly build nuclear power plants.
Yes, yeah. There's a couple. I think there's 4 main projects within this MOU. But of course, as we heard from the Premier of Alberta today, like she was talking about one of those being that carbon capture project, saying she didn't believe in carbon capture before, but now she sees the benefits of it. And so she seems to be on board. So we'll have to see if both sides keep to their promise here.
The BC Premier, David Eby, has spoken out against a pipeline. And I see the coastal First Nations in BC say we're still opposed, even after this memorandum.
Yes, and the coastal First Nations, they're a big part of this. If they don't have the coastal First Nations support, then this will not go ahead. So that's interesting. As you mentioned, they're coming out today saying this changes nothing for us. We still don't support it. They're very much against pipelines, very much against tankers within that coastline. So that's interesting. That's going to have to be addressed for sure. And then, as you mentioned, BC Premier David Eby, no comment yet today, but he has been quite vocal about this, saying he was not included in those discussions with Alberta and Saskatchewan about this project. He did have a phone call recently with Mark Carney, but he says that he needs to be included. The MOU does say it's committed to dialogue with BC to ensure BC shares the economic and financial benefits of this project. But we know Eby has also been questioning the project as a whole, talking about the price of oil and that potential for an oversupply next year as well.
Lindsay, thanks very much indeed.
Thank you.
Lindsay Biscaya. Okay, next we are talking rare earths with the boss of Eucor Rare Metals, and we're going to hear a lot about samarium. That is a rare metal that the defense establishment is worried about. We'll be right back. Shares in Eucor Rare Metals have soared almost tenfold in the past year. Now, the company just won conditional approval for up to $36 million in support from the Government of Canada to scale up a processing facility in Kingston, Ontario. The idea here is to refine 2 rare earths, including samarium, a very important material. Let's bring in Pat Ryan. He's the CEO and chairman of Eucor Rare Metals. Thanks very much indeed for joining us.
Hey, thanks, Andrew.
So we often hear rare earths. It's not the mining, it's the processing. And you're planning to get into that area in both Louisiana and Kingston. So just outline your plans, please, Pat.
Yeah, the Louisiana plans were something that took hold a couple of years ago as we engaged with the U.S. Department of War, as they're called now. And the plan in Louisiana is to build out heavy rare earth. Heavy rare earth is needed for neodymium iron boron magnets. which are used in many applications from AI to robotics to electric vehicles, wind energy, some defense applications. And so Louisiana was our first tranche, if you will. Second tranche, Canada. Canada looked at the need for samarium and gadolinium, which is another often unheard of rare earth elements, but very necessary when it comes to defense. So we're progressing with a plant in Kingston, again, with refining being the key. The whole way to break the rare earth control that China has right now is to take over and take back the refining. The refining and processing is where China has taken control of many critical minerals, including rare earth. And unless we get that back in North America, we can't make things happen. So we, in fact, embarked on Plant 1 with support from the Department of War, and then most recently NRCan, the Canadian government stepped up in a big way, and we're building a second facility to focus on samarium gadolinium, actually, in Kingston, Ontario, Canada.
Why Kingston?
Well, you know, our commercial demonstration plant is in Kingston, and we have a lot of really good metallurgy people there. We've got good scientists and chemists, and it's just a smart place to be. There's a real hubbub of metallurgy activity in that particular area. We figure, why not have our commercial demo plant, which is all the workup for our projects is done, process flow sheet development, R&D on different materials, testing of different materials, and why not take that centric campus, if you will, and say, let's build a building not too far from there, or brownfield a building not too far from there, or to greenfield something would be too long a time horizon, but go ahead and work on Kingston and build a campus there that will allow us to take that knowledge that we have and expand right in that area.
So tell us about this samarium. Apparently, the U.S. Defense Establishment is worried that they may have trouble getting hold of this material. What is it used for?
Yeah, samarium is used in samarium cobalt magnets. And I know we don't hear much about that these days, but samarium cobalt magnets are the magnet of choice for defense. And when you think of the bans that have come out from China, you know, on a Western level, the bans that they made back in April were actually in that package of 7 rare earth elements that they banned. Samarium and gadolinium were in there, along with terbium and dysprosium. And so that was a real challenge back in April when that ban came out. Most recently in October, they added 5 more rare earths to the ban. And then after the negotiations that have gone on back and forth between the U.S. and whatnot, they pulled back some of the restrictions in October, but the restrictions from April, the ban from April, is still in full effect. That means samarium and gadolinium, which were really down to stockpile levels. So magnet makers that are samarium cobalt magnet makers, either in Germany, which we're aligned with, or one in the U.S., which we're aligned with, they need samarium. And without the samarium, they won't be able to move forward. And for defense, they use samarium cobalt because it withstands very high temperatures. It works with a very corrosive environment. So you can imagine a military hostile environment. You need those types of extra performance parameters to get beyond what an EV would give you. Something that an F-35 fighter jet, a Virginia-class submarine, a destroyer, all of those missile guiding systems, they would need samarium cobalt magnets. In fact, Lockheed Martin in Canada, who does a lot of the work for the F-35 program, they use samarium cobalt magnets, and lots of them.
You spent many years in the auto industry, and you are an engineer as well. So give us some insight. I mean, how hard is it to process this stuff?
You know, it's not an easy job. If you're going to take on critical minerals, rare earth is certainly one of the most difficult ones. And you know, these rare earth elements are found all in a chain in nature. They're all found the same way all the time. And you have to get in there with a chemical program that takes an organic and aqueous solution and tries to break them down bit by bit. And it's a very difficult processing approach. The only real truth of processing refinement that's been shown in the world to work well is solvent extraction. But we have a technology known as Rapid SX, which is a very good way to apply the chemistry that much more effectively. It gives you 70% more throughput in a plant with 60% less floor space, which means less power, less reagents, less people, less everything. And it's just a very good turn-on, turn-off approach to the Western market that's needed. We've been working with our commercial demo plant in Kingston now for about 4 years, and we've run 6,000 plus hours on the plant. We've gathered up 10,000 plus points of data to compare solvent extraction and Rapid SX, and we're ready for commercial prime time.
You'll be bringing in some kind of concentrate, I guess, to these plants, not raw ore.
That's right. Yeah, it's a total rare earth oxide, which is a concentrate. So it's much reduced from don't imagine a huge ship full of concentrate. It's something much smaller. It's like it's a super sack, they call it, and it's really just a small contained rare earth oxide mix that's then separated out individually into all the individual oxides. But that's the key. Until you get those individual oxides, you will not make the metals, the alloys, and the magnets that drive all of this 21st century innovation we're talking about. That's where China has the complete grip.
Pat, we've only about 30 seconds. Raymond James have you at zero revenue this year, scaling up, though, to perhaps 50 million or more next year. Do you think you will have actual revenue next year?
Our plan is in Louisiana, by mid-26, we'll be commissioning and starting with our first Rapid SX machine. And by the end of the year, we'll have 2, perhaps 3 Rapid SX machines running in Louisiana. And yeah, that trail for the Louisiana plant is it's a 10,000 TRAO plant at the end of it after 3 years. But that 10,000 TRAO plant is a $1 billion top line revenue with a very good return. So starting in next year, because of the scalable modular nature of our tech, we'll be moving forward and getting to revenue.
Thank you so much, Pat. Ryan, Chairman and CEO at Ucore Rare Metals. It's Thanksgiving. All the best to our American friends and neighbors. The Wall Street Journal says some Americans are postponing their weekly weight loss drug dose so they can tuck into today's feast. Apparently, a lot of people are avoiding creamy and greasy sides. There's many takers of this GLP-1 drugs. They don't find those as appetizing. People are also cutting back on sweet dishes. The journal talked to one user of the drugs who's going to go with a healthy pumpkin cheesecake made of high-protein muffin mix and low-fat cottage cheese. Now, of course, these drugs work by suppressing appetite. A lot of people anyway stay away from greasy foods once they're on them because they can make you nauseous. So what about delaying your shot for a day or two so you feel like tucking in? The experts say that's okay. But you should wait at least 3 days before taking your next scheduled shot. And so it's fascinating. One user, and Wall Street Journal talked to people who've lost 60 pounds and more on this stuff. One user said she did skip her shots previously at Thanksgiving and Christmas, and it had a radical effect on her appetite. She says, quote, "I was literally actively sitting at the table like, okay, when are we putting pies out? What comes next?" She says she's going to be taking her drug as scheduled this year. Thank you very much. And once again, happy Thanksgiving to our American neighbors. We've got the close coming up after this.